It was a historic day for the Indian markets, where the benchmark index Nifty 50 registered its lifetime high and touched the 21,000 levels for the very first time. Overall, it was a sideways trading session initially with above average volatility, but later on in the last hour of trading prices moved higher, formed another bullish candlestick. Now we will be talking about Nifty 50 and Nifty Bank, which are two major stock market indices, as well as some of the newer stocks that are causing big movements in the market. We will also cover Fin Nifty and Mid Cap Nifty, which are two other indices that track the performance of different sectors. Mid Cap Nifty is expiring on Monday, so it's important to discuss its implications. There are a couple more important factors that have led to the market reaching at 21,000. We talked about if it remains at 2,900, it could potentially reach at 21,000. As we discussed in yesterday's video, if the Reserve Bank of India RBI doesn't surprise us, the market will reach at 21,000. Okay, but once the target is met, it should always be stopped after that. So, these are the things that we will discuss further. Who will buy at 21,000 now? If you've been paying attention, you'll have noticed that domestic institutional investors DI have been selling for the past 2-3 days. They know that they should book some profits at this level. Are foreign institutional investors FII buying? A lot of people might ask, why didn't FII buy? The potential reason is that they are in a difficult situation with their short positions. If they have taken a short position, they will always hedge their bets. So they may have to give physical shares. If they are afraid that the market will go up more, they will take a short position in the future and wait. What is their plan if they have to give physical shares? They must have already made plans to not work until the end of December because of the Christmas celebrations. So they start buying from the beginning and holding on to it. In case they are in a short position and the market shoots another 1,000 points, they will have physical shares with which they can offset their loss. Physical share means that they will have shares in their demat account. What are the reasons behind the market movements? These are all important things. Just keep in mind that this will help you understand the psychology behind it. Many people might ask, Madam, the market has reached 21,000. Should we invest now? Well, when it was around 18,800, I suggested that if someone wants to invest, they can do it a little bit. I wrote in the personal group that whatever you want to do 10% of it. No one can predict how much the market will rise or fall. See, we all try to anticipate, right? Our predictions can be hit or miss. But no sensible person would advise you to invest heavily at this point. Some people may be unhappy with this advice, but it doesn't matter. What matters is making money. It is not easy to make money by investing at 21,000. If you don't get this basic concept, then maybe it's better to avoid investing in the market. Because DII is also selling our own mutual funds. They are clever enough to take some profits at this level and wait for opportunities at lower levels. Because when the market is down, it's more important to focus on buying rather than selling. Because if you don't book profit, then it won't come home. Even in trading, have you ever had a loss of 100% throughout the day? You have come in profit, you have not booked. That's when your overall loss happened. Any trader who has not come in profit and has been at a loss from the start has a very rare day. Actually, almost all the traders I know make a profit on their first trade. Still, you end up in loss. Why? Because you don't know how to take your profits and cash out. But DII knows how to do that. They are booking now. They know where to book. Then when the market comes down, they will buy there. Any logical person will do the same. I have also redeemed some index funds myself. Now, some people might say that you redeem just to pass the time. It's not like that. I have redeemed according to logic. Let's see what happens next. But I have started redeeming some index funds. Let's see if we get more dips after that. Now what is it? I have booked profit. Now if you're looking to buy, you can start buying at a drop of 500 points from here. Why? Because I have booked profit. Now we will start buying it slowly from below. So let's start the discussion. Banking and IT were performing very well today. But except them, all the sectors were running muted. and there was a little selling pressure in the mid-cap. This usually means that the market is trying to find a balance for once. So let's see. Usually, when the market reaches its peak, most of the stocks in Nifty 500 are above their 200-day moving average. Currently, those 83 to 84% stocks are going up. The top is made around 90%, so there is a little more pullback from here. After that, the market always gives retracement. This has been seen. Although nothing is seen nowadays, there are always new things in the market. However, I had to inform you about whatever has been presented. So let's see. Now many people will say, if the top is made, should we buy put here? This is your problem. Trading is not like that. If you want to make money in trading, then buy call, buy put. If you start asking, then money will never be made. It will never be made. The situation changes every second in the live market. If you think buy call, buy put, money will be made, then it will never be made. Whatever the situation is, it will be done. Whatever the situation is, it will be shown. Let's see what the discussion was. If you like our videos, then do like it. Let's come to what discussion will be there for Monday. On the weekly chart, the Nifty 50 has formed a continuation gap and prices have closed in the green for the consecutive 6 weeks. The prices have given a horizontal trend line breakout and the index has gained more than 3% return in the week. The momentum oscillator RSI 14 is reading above 80 levels and indicating strength in the current momentum. The MACD indicator seems to be overheated and reading near 450 levels with a positive crossover. The view remains to buy on dips for the index towards 20,900 to 20,850 levels, and the upside can be extended to 21,100 levels. It was a sparkling week for the banking index, where prices gained 5.5% in a week and formed a tall bullish candle with an unfilled continuation gap on the weekly time frame. The index on the weekly chart has given a horizontal trend line breakout and prices have closed above the resistance band of the range. The Bank Nifty on the daily chart has witnessed a rectangle pattern breakout and the index has most likely completed the throwback of the pattern. Presently, the index is trading comfortably above its short and medium-term averages on the daily time frame, which is a positive sign for the index. The immediate support for the banking index has shifted higher near 46,750 levels as prices have witnessed a range breakout and the immediate resistance is likely to be kept below 48,000 levels. Long story short, in the Indian markets, the equity benchmarks resumed their upward trend on December 8 after a day's pause to hit new highs, as the Reserve Bank of India left the key interest rate unchanged for the 5th time in a row. The market recorded the biggest weekly gain since July 2022 as both the benchmarks gained 3.5% each. FMCG, oil and gas and power indices were down 1% each, healthcare and auto were down 0.5% each. However, bank and realty were up 0.5 to 1%. The Reserve Bank of India kept the repo rate unchanged at 6.5%, citing a potential resurgence in inflation and signaling that price stability remained its primary objective. The central bank raised its GDP growth forecast for 2023-24 by a huge 50 basis points to 7% following the big upside surprise in the July-September data. In the global markets, Asia-Pacific markets were mixed as Japan's third quarter GDP was revised downward in a surprise move, while India's central bank held its benchmark lending rate steady. European stocks slightly higher ahead of key US jobs report. Oil heads for 7th weekly loss with supply surplus and weak demand from China. Let's talk about some stocks that were in news today. TVS Electronics shares rose despite a Rs 35 crore notice from Chennai Customs. The company plans to appeal and has hired an attorney for the tribunal. The market's positive response might suggest investor confidence in a favorable resolution or a belief that the impact won't be severe. Watching the tribunal's proceedings could offer insights into the situation's impact on the company. IRB infrastructure developers saw a 6.5% surge hitting a 52-week high of rupees 40.95 on December 8. This spike followed a noteworthy 20% year-on-year increase in gross toll collections for November. Despite reduced economic activity due to holiday festivities, the company recorded toll collections worth rupees 437 crore, up from rupees 366 crore in the same period last year. This strong performance amid holiday slowdowns showcases the company's resilience in maintaining robust revenue streams. Shares of Eiffel Securities gained 4.2% after the Securities Appellate Tribunal set aside SEBI's order dated June 19, 2023, prohibiting Eiffel Securities from onboarding new clients for 2 years in respect of its business as a stockbroker. That's it for today. Thank you for watching me. See you soon. Bye.